Hello, I'm Richard Murphy, and I want to talk about an aspect of modern monetary theory that is, I think, relatively little understood, and that is the role of tax in MMT. It isn't understood because what a lot of people think modern monetary theory says is that a government can produce money at will and spend it without limit. Now, that of course is not true. Well, it's not true that a government can spend without limit. A government can produce money at will whenever it wishes by simply telling its central bank to do so. But there is a limit on spending, and that is full employment. When there's nothing left to buy, creating more money produces inflation. And tax has a fundamental role to play inside modern monetary theory by cancelling inflation. That is its primary purpose inside the whole of MMT. Because unless the money that the government creates is cancelled by tax, we will of course get rampant inflation, and nobody wants that. And everyone inside modern monetary theory realises that this is absolutely essential to keep the economy in balance. So the fundamental claim made that modern monetary theory has no use for tax is simply wrong. But there's something much more important about modern monetary theory and tax. Once we understand, as modern monetary theory says, that the government doesn't fund its expenditure with tax, because instead it pays for its expenditure by creating new money, then tax takes on an essentially different role within the economy. First, as I've just explained, it exists to cancel inflation. That's its first and most important task in MMT. But when we've liberated tax from the role of raising funds to finance activity, it takes on the role of being an agent for change within the economy. So it's used to redistribute income and wealth. So progressive taxation suddenly becomes much easier to think about, because we're not exploring progressive taxation with regard to the amount of money it can raise, but with regard to the social consequence of addressing inequality. We can use tax to reprice those things that the market creates, which do, however, result in harms: alcohol, tobacco, and of greatest importance now, carbon. We can think about how tax can play a role in reducing our carbon consumption as we move towards a sustainable economy. We can use the tax system to stimulate activities that we want and to suppress others we don't want by offering tax incentives and allowances to activities like, for example, new house building on a sustainable basis, or the incentive provided to insulate properties. And at the same time, look at using tax to begin to harm or reduce those things that we don't want to happen, like, for example, burning of fossil fuels. Now, tax is then this fundamental social policy instrument rather than a financial policy instrument. And MMT lets us think about tax in a wholly new way. It becomes an ethical instrument for change. It lets us state our priorities as a society and gives us a tool to deliver them. Now, that makes the whole of tax debate something unlike anything we've really ever had, because we've presumed that overarching everything is, does it raise money to fund government expenditure? But now that's not a question we need to prioritise. We can instead ask the question of, what society do we want? How are we going to create it? And what tax role can tax play in delivering that? And to me, that's really exciting. This is one of a number of videos around modern monetary theory and tax policy that are going to be created. If you're interested in more, please click the subscribe button below this video. Follow me on Twitter at Richard J. Murphy. Look at my blog, Tax Research UK, and I'll be talking about this issue again soon. Thanks for watching.